Hey everybody, I'm here with Vern Larson, Advantage Home Mortgage. Wanted to hop on today and talk about some of the stuff that's going on in the market. I think, Vern, the first question I get asked most of the time is what's going to happen with the rates. And so,
that is a great question, Brad, and thank you so much for having me on your show today. Nobody has a crystal ball, unfortunately, but what we're hearing is that rates will probably be trending down through 2025, maybe starting a little later than what we first anticipated. We were really thinking we were going to see these rates start to come down in 24, but they really haven't too much yet. But right now, rates are hanging, around 6.2, depending on the day on your government stuff, so your FHA, VA. And then your conventional, you're looking at 6.5 to, 6.7. Really not a terrible rate. In the big scope, you got to realize that there is somebody at the back end of this loan doing the investing. So they have to be able to make a little money. And, 1% and 2% that we had back in the day in 2020, I don't think we'll ever see that again because it wasn't realistic for investors to want to do that. You know what I mean? It was just one of those crazy things that happened. So I think we'll see, hopefully, some 4s and 5s in the future. When it'll be, not exactly sure. There are some companies out there that we work with that are staffing up right now, thinking it might be sooner than later. So they have a little more money, a little more intel than me. So hopefully they're on the right track, and we're going to see that here early in 2025.
The grand scheme of things, though, like a 6% interest rate, if you look at the history of mortgage rates,
historically, that's very good.
Very good.
Very, very good. We got spoiled.
Right.
Like our last, 5 years. We were really spoiled. And it's tough because people that have those 2.7s and 2.2s, it's hard for them to want to give that up. And understandably.
Right. Absolutely. And so if we're kind of, you don't want to say stuck with the 6% rate right now, right? What are some different things maybe that people could look at, some different programs that you have to really help people adjust to that 6% rate?
Well, everything is very secular in the mortgage industry, and we've brought back something that was an old thing. This was like from the 1980s, and it's called a temporary buy down.
Okay.
So basically how it works is we can either, slash your interest rate for the first 1, 2, or 3 years if the seller is willing to help us with some concessions. So then your rate could go from 6 down to 5, 4, or 3, and then for each year it steps up. So if you did let's say a 2-1 buy down, instead of 6, you would start at 4 for the first 12 months. Then your rate would go to 5 the second 12 months, and then to 6 from then on. So it's not variable. It's not an ARM. It's not one of those crazy loans that's going to keep going to 11 and 12% and put you in a bad spot.
Right. So and to clarify, those like the ARMs and the adjustable rate mortgages, those are based off market conditions, right? And
right.
So when those adjust to whatever the market is. What you're saying is it's a fixed buy down.
Right. And the seller, it's almost like an escrow account where so much of the money comes in to get you that 5% for that 12 months. And then if rates work out what we're thinking, then we can refinance that and then get you that 5% long term. And the really good thing about this is that if it happened right away, like say in 6 months from now, any of the money in that account that we haven't used, it actually gets paid back to you, and it would lower your mortgage, what you owe on the mortgage. So it'd be a principal reduction on your mortgage, and so that might even pay for your refinance. So it's a really cool program. I'm so glad they brought it back. It's a lot. It brings a lot of affordability into things. It also, if for whatever reason you think you're going to get a raise, maybe you have a year left on your car, and then if you can't refinance, then this payment might not be a big deal in
over
a year
time.
or two. Yeah.
Because a lot changes, right?
Right, yeah.
Okay.
Everybody, hopefully we're all making more
right.
in 25, 26, 27. So if you get a raise or making more money, whatever, maybe that payment at that 6% doesn't bother you. If rates never come down, then at that time you just write it out there.
Okay, cool. Real quick, I think one question, what's one thing that a normal consumer, a normal person could look at to maybe outside of calling you or myself, what's one thing they could possibly look at to get an idea of what the rate might do?
So at my desk, I use a ticker. It's the little caret symbol, and then TNX. That's the 10-year treasury bond. And if you watch that, it's pretty good. Okay. So if the treasury bond is down, then mortgage rates are going to be down. If the treasury bond is up, then the mortgage rates are going to be up. So if you want to put that on your stock next to Apple or whatever, it's the little caret and then TNX. And watch that. I think today we're like 4 or 5, something like that.
Okay. Awesome. So, well, thank you, Vern.
Hey, thanks for having me. If you have more questions, if anybody has any questions, you're free to reach out to me. I usually answer my cell phone 8 to 8 are the hours I carry at 719-251-7048. I'm also in Eagle Ridge, Advantage Home Mortgage, 4601 Eagle Ridge Place. Stop by, get a cup of coffee.
There you go. Right on. Thanks, guys. Thanks, Vern. Appreciate you.
Appreciate you. Thank you.
Yeah.